Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Monday, September 30th, 2019. I wanted to get a video out because there are a lot of charts I want to cover right now, and I can't screenshot post them all. What I'll do is just I'd like to run through the indexes and the market-leading FAANG stocks real quick, show you some what I think are very significant technical developments, and the near-term outlook. Here's what I think. In a nutshell, I think this market can go either way from here. There are quite a few bullish setups on the shorter-term charts. Plus, we held so far, tested, slightly undercut, which if anything else is a little more bullish when you undercut a support level and then regain it or recover it, because you tend to suck in some shorts. That's why I held off on adding those SOX and QQQ trades. You want to see a solid daily close, an impulsive break, and you had some support levels below. So we'll see. Now, we could still fail these levels. And again, I want to get this video out because I really think right now we're at a pretty an inflection point that's going to go either way in the near term here. Now, so again, we are sitting, as I said Friday, precariously on some pretty key support levels, both with individual stocks and the markets in key sectors like XLK. So be ready for that. See an impulsive drop down. Again, if we take out Friday's lows, that should do the trick, I would think, especially if we keep going down from there and it looks like we're going to close a big red candle. That should do the trick for some swing sell signals. Now, I know that I've been posting a lot of active trading stuff, and I'm going to do my best to differentiate what's active trading opportunities and swing trading. As far as swing traders, probably sit back, like I said on Friday, and wait, and that's why I didn't have those as official trades. Just wait for some higher probability sell signals. This market's been plagued with false breakdowns and whipsaws recently. So, all right, so there it is, QQQ. Everything I went over Friday. I don't want to spend too much time on the same charts. Nothing's changed. We're about flat. This is that's XLF. I'm sorry, I'm going to do XLK. We're up slightly, but again, we're above those BOD trend lines, benefit of the doubt trend lines, the last chance support. And here's where I wanted to roll into. Let's look at, we'll start with the S&P 500. And let's start out on a 60-minute time frame. So what's most important to me is we have pretty clear positive divergence, and this is one of my go-to swing trading time frames. Obviously, when swing trading, I'm always watching the daily charts too, and I'll usually use the daily charts to help identify price targets, rough entry points, rough exit points. But I like to use the 60-minute charts to really hone down on that. And over the years, it's the 60-minute chart when I see divergent highs and divergent lows. If you're new to the site, I'm talking about negative divergence. You have a stock making a higher highs. You can see it here. I've got these levels turned down. That's a divergent high. Those are where I look for the inflection points for swing trading. This chart goes back, you can see here into June. And you can see all the major inflection points that were swing tradable. Really the market hasn't gone anywhere for months now. I'm talking a few percentage points, but those are the swing tradable moves. So what I do is I look for divergent highs during an uptrend. There's a divergent high, there's a divergent high, there's a divergent high, and I look for divergent lows. We haven't had a lot on this time frame, but we go back over the years, and I've highlighted a lot of 60-minute divergent lows during corrections, and that is usually when I look to cover shorts, swing shorts, and then turn around and position long for a bounce that's likely to last at least several weeks and sometimes months. And so I want to point out right now we have that, I don't call it cross currents because we haven't really taken out the support. And if you look at it glass half full, meaning bullish, you can say, oh, well, it's another successful test of that December 24th uptrend line on the daily chart. So that's one way to look at it. But again, everything I've talked about, the waning momentum, the negative divergences on that daily time frame, tell me that most likely sooner than later those trend lines are going to break and we're going to have a major trend reversal. So I guess what I'm trying to say is here's a bullish setup on the 60-minute and even 15-minute time frames I'm going to get to, and that may lead for some long side trades, even swing trades, but you're getting to the point where it's picking up nickels in front of a steamroller. And I still think if these charts play out, it really meshes with that scenario that I have, which is still close to 50-50. Whether market goes on, punches up and makes a marginal new high on SPY, maybe even QQQ, and then has a major reversal. So let's just keep it simple. That's my thoughts. Like I said, it's one of those times where the charts are not clearly aligned. I have these bearish developments, potential still pending sell signals on the more significant daily time frames, but I have quite a bit of it's even a mixed bag. It's not all bullish charts on the 60-minute charts that I'm going to get to here, but I did want to point that out. So let me show you the scenarios here where I think we might go. First and foremost, well, I'll get to the 15-minute charts in a minute. I mentioned that you can take a short here because what I expect, I posted that in the trading room, by the way, just shortly ago. I think we're going to come on down. That'll show better on the 60-minute chart. There's a little gap here, today's gap. I think we're going to pull back here, and so what I see is a most likely scenario today, and this is near-term stuff. This is a makes a falling wedge pattern, bullish falling wedge pattern, but it doesn't look like it's ready to break out. It could, because we have, there it is, that 60-minute bullish divergence, divergent low. But it could very well work its way down, and I think that's what'll happen. Probably is another thrust down, but there's that key 294 support. So see, we're really flirting. We're kind of stuck between a rock and a hard place, where we could get a big sell signal that's even more significant on the daily time frame, or we could break out here on the 60-minute charts and rally up. So I hate wishy-washy analysis, but I made it pretty clear to you guys. I lightened up, closed out, in my active trading account, my index, positions on at the close, and although I just took a pot shot on a short trade, that's a day trade thing. Don't be concerned about that on the swing trading here at resistance, and I'll get to that again on the 15-minute charts. They show a little better. So that's what I'm looking at, and respect a breakout. And here's something I would say too. I have see this line right here. That was an uptrend line right here, which was broken. It's highlighting right here. We had a pretty impulsive move once that level went. So the way I'm looking at this is I favor a pullback. My convictions aren't super high, but this would be, I'm going to show you right here, I'm going to box it in and tell you that would be my whipsaw signal target zone. So if we break out, this is what I suspect, if we pop above here, we would go on, we would back test that trend line right here, and then that could lead to a pullback to either back test this downtrend line or possibly even fall back in the wedge. So I'm giving you my thoughts here, but you have to, I'll adapt personally. I'm short right here for active trading purposes right now. I'm willing to let it pop above that downtrend line. I think that'd be a nice a bull trap, and I think it would fail right here. Anything much more than that, and then I'll have to get out of those shorts. But that would set up, and again, I'm very, my active trading, I change my plan on a dime. I'm looking at not just this, but so many different charts, and that's why I'm doing this video. That I may, if I stay short, we get a back test, I may go long. If I think we're going to bounce there, it all depends on what these other stocks and sectors I'm about to get into, what they're doing at that time, and how things look. All right, so that's what I'm looking at today. But to keep it very simple, we haven't broken above that downtrend line. It's still a downtrend line. I still favor more downside in the wedge. As I said, whether we have a false little pop or not, I think we work our way down here. And here's the thing. Let me kind of get this out there as well. If these 60-minute divergences fail to play out, because they usually do, the primary trend on the market, the longest term trend, is still bullish. We're still in a bull market. And bullish chart patterns, bullish divergences have a much higher rate of playing out and a lower rate of failing in a bull trend than they do in a bear trend. So therefore, divergent highs, bearish chart patterns, when they break down, sometimes they either have a they play out very small, or it's a false sell signal. In other words, in a bullish trend, bearish chart patterns have a higher rate of failing. You get more false signals on the short side. So where I'm going with this is, should these divergences not play out, let's say these wedges form, whether they break out now or soon, and then we dump down, we break the lows, that would be very bearish. That would be a pretty bearish technical sign to see pretty clear potentially bullish divergences. I know I hate to sound confusing, but when I say potential, remember there's a difference of an actionable bullish trade or long trade setup and potential. This is potential divergence. We have no buy signals, zero buy signals. The trend, as I've talked about last week, since these recent highs is clearly bearish. The near-term trend right there, I just showed you a series of lower lows and lower highs. So this is just potential bullish formations here and things that could play out. But if they burn through them, then that's pretty bearish. And again, especially a drop. So there it is, levels to watch. What else I want to show you here? Yeah, that's about it there. Again, I wanted to highlight those divergences. Oh, and say that they could also be extended. And that meshes with us working our way down within the wedge. And again, this wedge isn't fully mature. It could break out if it does break out. But most wedges, they come out closer to the sweet spot in the wedge, somewhere down in here. So anyways, that's my very near-term scenario. There's a, the backfill today's gap would be my near-term target. That's what I posted in the trading room for a pullback trade for active traders. And you can see we could work our way down, have another rejection here on the top of the wedge, and still put in a divergent low, somewhere in here, and then go on to breakout. So that is a potentially bullish setup right now without a buy signal, if that makes sense, because we have the buy signal would come on a breakout above the downtrend line, the wedge. So there it is. So we pretty much hit the top of the wedge, which was the objective short today for an active trader, but not swing traders, because I'll probably be out of that trade before this video makes it out to you guys. All right, so now let's look at QQQ. Same thing, very clean wedge. I know there's a lot of lines on this chart, but I'll just show you real quickly. This is the most important. It's a pretty well-defined downtrend line. There's our bullish divergence right now, and you can see I extended that line because we could work our way down here. So you can see QQQ, it hasn't even hit the top of the wedge, and that's one reason. Remember, I showed you a second ago on SPY. I showed you that uptrend line and the potential for a little false breakout there, a failed breakout or whipsaw signal. One of the many factors that go into that is this, that QQQ has yet to hit the comparable trend line. So if SPY were to break out, SPY traders might say, great, breakout, that's a pretty clear trend line, I'm going long. And at the same time, QQQ traders would say, oh, great, a rally into downtrend line. So the Q traders would sell. And then remember that these stocks, these two indexes, have a lot of the same overlap with the same top components. And so if QQQ traders step in and sell, then at the same point in time, that breakout in SPY would likely fail at that marginal pop level I gave you and backtest the trend line, everything else. So that's one of the things, and this is just an active live scenario that may or may not play out. And if it does, I'll adjust accordingly, or if it doesn't, I'll adjust accordingly, and if it does, I'll do the same thing. I may add to shorts if QQQ gets there and SPY gets to that max bounce target, and then if the reversal happens. Again, it's my trading is very, very dynamic. That's active trading stuff. But as far as swing trading goes, let's watch this, because if these wedges do mature, I'd prefer to see them to position long, and it is a little scary going long right at key support, but you can do so with stops just below, so the risk reward would be favorable. I'm just right now like to see how we trade today. I'd like to see how this week starts out. So there it is on QQQ 60-minute chart. Again, my preferred scenario is that we don't break out now. If we do test that trend line, if we come on down, and we could come on down within the wedge, we could have a stop clearing move that takes out Friday's lows, as long as it's not, very impulsive, and of course we don't close below Friday's lows. And as you can see, doing so would make this wedge a little more mature. And that's really the sweet spot of a wedge right here. If we went down somewhere within the wedge, consolidate, could zigzag around, and then broke out. So that's our bullish scenario where I'm on watch for. And the other thing I wanted to mention on both SPY and QQQ, something I'm watching as well, is the PPO is down below the zero line. It's not a be-all end-all, but it's a pretty good trend indicator. When the PPO 9 EMA is above the zero line, the trend is bullish, and once it crosses below, as it did right here, there's your cross down, that white dotted line is below. So that is something to monitor. A lot of times when you're below that zero line then acts as resistance. So these are all the things I'm watching today, and if nothing else, because I'm telling you, I think things are probably going to go one way here in near term, but we could break out of these bullish falling wedge patterns, which would have pretty bullish implications near term for swing traders. But right now I'm keeping things light. I want to see how the day evolves here, particularly with I'm not making any changes to any swing trade positions right now. Okay, and here it is on the same wedges on the 15-minute time frame. I like to use this one as well, especially right now. There's your nice clean downtrend line on QQQ. There's your divergent low on the 15-minute chart as well. It's the same divergence I showed you on the 15-minute chart. And again, room to go down within this wedge, but it's a trend line, so if you broke out, you have to respect it. So if you broke out, you can see where the overhead resistance levels are, but I also have resistance here around 188.10. You can see a couple reactions recently, and that's where QQQ is now. So if it fails there, and that's what I'm leaning towards, but it's, we already had a rejection once. It's really trying to push up against it. We may pop that and may run up here. So I see, a little more downside till we hit that trend line. That would be, by the way, for active traders, your next objective short entry on the Qs of, run up to that downtrend line with a stop somewhat above it, especially on a 60-minute close. But I'm still favoring a backfill of today's gap right there. And then at which point, on my active traders could then cover a short and or reverse to a long, with obviously anytime I say that with the appropriate stops in place. The appropriate stops all depend on your price target and your entry price. It's not always going to be the same as mine or anybody else's. And here's SPY on that same 15-minute time frame. Remember, we looked at the 60-minute time frame. There's your downtrend line, pretty well defined right there. Like I said, objective short there, but I can easily see the possibility, because if QQQ wants to make a comparable test of its downtrend line as I just showed you, what's that going to mean? It's going to mean SPY is going to pop above this downtrend line, and then I really like that. And I went with a light short position for day trade, but I will add to it there, because why? Well, number one, like I said, around the time SPY pops that and comes up to about 297.50, it's going to hit. That's pretty significant resistance. Let me just show you why. Sometimes I do these levels and I might think everyone sees what I see, but I see a lot of reactions. I'm circling the reactions. Reaction is a reversal and or consolidation. Like right here, we consolidated, hit it, consolidated, and then made impulsive break. Little bear flagging action there. So you see all these reactions on that level recently here on this 15-minute chart. So again, that would entail pop there. It would look to SPY traders as it is a breakout, but then again, if QQQ traders stepped in and sold at the comparable downtrend line, which we'd probably hit at that point in time because it's about the same distance, that would then cause a reversal, and at best case scenario, which might be an opportunity to go long, a back test of the trend line, maybe at the same time QQQ pulls back but then powers through its trend line. But again, until QQQ breaks, makes a solid break of its comparable trend line, SPYs are probably not going very far. And so that would be a bullish scenario, or you get a failed breakout, which is pretty bearish, and then maybe we come down and backfill today's gap if we don't do so before then. And of course, maybe we come on and work way within this wedge. Now it's hard enough to call these little micro calls, so I'll just have to play it by ear, seeing what happens here. Should we break out and just keep on going, both QQQ and SPY, then forget about this, back test, or forget about this wedge maturing like this and having another major thrust down. If of course, again, if we broke out in both SPY and QQQ today. All right, let's see, 18 minutes. Let me rifle through the components of QQQ. That's what I wanted to show you here, and why I'm seeing just a lot of kind of mixed bag of technicals in the charts. So we say an index or sector is simply a sum of its parts, or more accurately, a weighted sum of its parts when you come to QQQ and SPY, because it's a weighted market cap weighted indexes. So you have, I want to show you the 60-minute charts right here. This is Microsoft. We'll look at a 2-hour time period. Working its way. Here's a well-defined trend line. That's what I'd leave it at that. Watch that trend line, set a price alert. Look how many reactions on that trend line. You can see the dates down here. So it goes from early August right there, and you have a lot of reactions on that trend line. So watch that. Microsoft is above trend. This has been, as I highlighted last week, the strongest stock by far in the tech heavy, all the FAAMGs, FAAMG, the market leading stocks and the top weighted components of the NASDAQ 100. So let's watch that. Next one up is Apple. Mixed bag on Apple. Let me take it down here to a 60-minute chart. Apple broke out today. That was bullish. And so it's hard for me to see the market going down very low, much lower today unless this breakout fails. This was a downtrend line right here. Here's an uptrend line to watch. So these are the most important levels to watch on Apple. Right now it's a breakout. Stock still hasn't taken out the previous high, but that was a pretty clean downtrend line right there on the 60-minute chart. And I had some minor resistance here about 224.44. Let me add a second line. That line should stay there, but there's a gap right there. And so really right now we've just backfilled that gap, although it was already backfilled once, so it really doesn't have to. I wouldn't favor rejection as strong as I would on the first backfill. Usually once a gap is backfilled, then you get a reversal. So that's about 223, call it. But it's a breakout right now. So unless that breakout fails, that's bullish for the market. Apple is one of the largest stocks there. And so that's a watch. Now, on the bear side, if it fails, the breakout fails, watch for this uptrend line to break. So those are levels to watch on Apple. Alphabet. And overall, again, just like Microsoft hasn't yet broken trend. Let me just give a takeaway with this. Stock is in an uptrend and has not yet broken trend. Remember Friday it tested, intraday broke it, but so far it's hugging this uptrend line right here. Again, the divergences tell me it's just a matter of time whether we have another thrust up or not. So like I said, this is why I'm kind of getting these videos out actively, because this stuff can happen fast, and these are all the levels. So if you want to increase the odds, if you start seeing some of those sell signals trigger I talked about, some of the trend line breaks, come in, look at these intraday charts, 60-minute charts of these market leading stocks, because until they break, the market won't break. That I can tell you. Alphabet, we'll look at Class A. Nice clean uptrend line. Now this is a bearish chart, although it is in an uptrend again. So when I say a bearish chart, yes, bullish in the fact the stock is in an uptrend. All right, let's make no mistake about that. Making a series of higher highs and higher lows, right, for a while now. Although since back here was in a near-term downtrend. However, there's a trend line that I'm watching, and I'll probably set, if I haven't done so already, price alerts on all of these. And the more price alerts trigger around the same time, the higher my confidence goes that we're going to have a breakout that sticks. So watch this trend line on Alphabet. It comes off the looks like the late August lows. Just a few reactions so far, not as valid as some of the other trend lines I just showed you, but there's a negative divergence that tells me it's likely going to break down sooner or later. Even if we get another reversal here, we'll probably get a breakdown soon in Alphabet, but as of now the near-term trend is up. Amazon. Amazon, as I've covered recently, mixed bag there as well. You had this trend line on the daily chart that broke down recently. The stock is well off its highs. It had a big divergent high, overbought, and those divergences have been playing out so far for a pretty good correction. You know, this is one of the most beloved stocks out there and the top component of the NASDAQ 100, and it's down about 16% off its highs so far. Pretty ugly daily chart in my opinion, and weekly chart, also an ugly weekly chart. I see a lot more downside in this stock. It's just a matter of near term. If the market rallies, if these 60-minute divergences play out, Amazon's probably not likely to fall too much. But just this chart alone, right now, I'll tell you the stock looks to be headed to at least my next target down here, about 16.16 right now, barring any type of stick save. What's giving me pause, and the reason I'm not short that stock, is because I see pretty strong bullish divergence here on the 60-minute charts. These divergences usually play out. Right here we had a divergent low on Amazon. You can see it here, 60-minute chart, positive divergence, right? And that played out. And divergences, I always say this, if you're new to the site, divergences in themselves are not a buy signal or a sell signal if they're negative divergences. They're merely an indication that a trend change is likely. And where your buy signal comes on a breakout, in this case of that falling wedge, breakout, back test, and then you had a rally. And it was about close to a little less than what the wedge would have measured, but ran right into resistance. So right now what happened is those divergences that were in place back then have only extended. That was our initial reaction low. We're still making higher lows, and even within there we had a little micro negative divergence, a small divergent high right there. See it on the 60-minute chart. on this 60-minute chart and a correction. So this is a larger, more powerful divergent low, and I'll just keep this simple. I think if the market does break out, we break out of those 60-minute wedges I started with, and the market is going to push out and make a marginal new high, whether we have 2, 3, 4, 5, 6% upside in the market, then Amazon will likely break out of this trend line. You can see a nice clean downtrend line, and it could run, especially with this divergent low. So, and then that whole breakdown on the daily chart I just showed you will prove to be a false breakdown. So we need to watch this. If it does break out, well, you can see these are all micro levels, but here's a downtrend line that may come into play right here. Well, you can see it off the highs. So these are all levels to watch. And again, all this stuff it's intertwined. And that's why, you know, it'd be easy to just focus on QQQ if you're trading only QQQ, or SPY if you're only trading SPY. But I think it's important to keep an eye on what these guys are doing, because that'll give you insight, or help to give you some insight as to which breakouts may stick and which ones might not. That's kind of part of what I'm getting at here. All right. And finally, I already covered the Google. Facebook, same thing. Facebook has about a comparable divergence as I just showed you from the same points as Amazon does. It just recently broke down that previous reaction low, but the chart looks a lot like Amazon. You have a near-term downtrend line that comes off about the same levels, and so this is something to watch. And you even have a shorter-term divergence right there. You had the big divergence I showed you, and then this smaller divergence. Price is making lower lows, and the indicator's making higher lows there. So that's how Facebook looks right there. At support 2 here on the daily chart. I have a lot of support lines on Facebook, but here's another one like Amazon that is, you know, it's down quite a bit, down about the same amount. It's amazing, or coincidental, how close these stocks are tracking. This one's also down about 16% or so off the highs. So it's near term, well, not very oversold. Oh, and you also have bullish divergence on the daily chart. I told you earlier in the video the 60-minute charts where I usually look to position for, you know, swing trade lasting weeks, maybe even months. These are much more powerful swing trades. If this divergence is confirmed, and I suspect it will be if the market can hold up here and break out of those 60-minute wedges and run, and this will be one of your better trading opportunities. I see more upside in this stock than I do in some of the other FAANG stocks. So this one and Amazon, I think, would both. Let me see if we had those same daily divergences on Amazon as well. Yeah, we sure do. Look at that. So you want to know if the market holds up and doesn't break down soon, I think these two probably have more upside than the rest of the FAANG stocks, Amazon and Facebook. There's your positive divergence on both the 60-minute charts all the way out to the daily time frames. Recent breakdowns, which could prove to be bear traps, you know, false sell signals, but work to be done. There's, you know, come up here, it still has to back test this trend line from above, has to take that out, has to recane it, and that's it. I want to wrap up here. The only other one I'd like to cover, because it's right out there, it's about the 5th or 6th largest holding, is Intel, and it also speaks to the semiconductors, which I'm watching closely. Intel broke out on the 60-minute chart. I just jumped to this small, it's a descending or descending broadening wedge pattern, like they call that a megaphone or broadening wedge pattern. Looks like it broke out. It's a little sloppy price action. Still has resistance overhead. Let's just say I don't have a very strong opinion on this one, but the semis also are, I think, will have more downside than the broad market if and when we get those sell signals that I was talking about last week, and we're still watching for. All right, so these are things I'm watching for. Like I said, some mixed bags, but a lot of divergences, potential bullish setups on the indexes, as well as a lot of these market leading stocks. But should those divergences fail to play out, even if we have another thrust down or not, in other words, if these divergences are just negated, we see some big drop below Friday's lows, something like this on SPY and QQQ, we see these divergences taken out. What does that mean, taken out? Well, you clearly move below those previous lows, at which point you no longer have any potential divergence. If that happens, that's pretty bearish. Otherwise, as of now, you do have those potentially bullish patterns, or divergences, things like that, and we need to respect that if you get an upside break, and it may be a swing trading op for you. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.